Phil, I'll hand over to you from Health and Safety Protocol Central.
Yeah. Yes.
And we'll start our session, hey?
All right, Ash. Thanks, mate. And good to be back for another chat after being sidelined last month for our guest speakers. They were good too, weren't they?
They were good. It was a very good session. Yeah.
So today, again, we're mainly going to focus on what's going on with the ATO and their debt recovery efforts. Mm-hmm. Things are happening, and it's just so important to stay on top of where things are right now. Before we get into the main topic, though, Ashley, what news or updates do you have for us this month?
Yeah, look, I think, the one thing that everyone would be seeing on the front pages of the papers is obviously the building industry woes that are going on. It almost feels like there's a new company going into liquidation or voluntary administration every day. I think when you look behind it, though, it's not quite as many as you would want. And there's been some commentators who have actually said that the numbers of companies going into liquidation at the moment in that industry is actually less than it was pre-COVID.
Right.
So I still think we've got an upward wave to come with the building industry. They've got some significant pressures, and that's an area that we'll continue to keep a very close eye on. The other thing that's affecting across all industries is this tight labour market and the upward pressure on wages due to all the other factors that are happening in the economy, the interest rates and inflation and all the rest of it. Just getting and retaining staff, I don't think there'd be anyone on here today that wouldn't know just how difficult that is at the moment. And that's having a negative impact on business growth because you can't grow if you don't have the people around you, around the team to do it. And like seems to be almost the normal thing here in Australia now. We've now got adverse weather events happening all the time, which has, again, significant impact on supply chains, which are already under enormous pressure. And all of those things, all those little pieces are all fitting together to create, some really, really interesting and potentially catastrophic sort of issues to come for business. On top of that, probably the one that I think has the biggest concern moving forward is probably fuel prices. The government came out yesterday saying that the 50% reduction in the excise tax, which was in place till September, the new government has come out saying that they won't be extending that at all.
Right.
So with fuel prices that are already very, very high, we're now going to have another 30 cents thrown onto the top of that in a couple of months' time. So, unless there's a real downward pressure on fuel, I think we're in for a pretty hard time moving forward in that area. And then, of course, with all of these things happening, businesses are under pressure.
Yeah.
So their businesses are now having to push harder to get their money. So that creditor pressure is really growing across the marketplace. And we're seeing a lot more private creditors chasing and going about getting their money back as quickly as they can.
It was some very challenging times, Ashley. And when we talk about creditor pressure, a big creditor for a lot of businesses is the ATO. Just how big a creditor are they?
Yeah, so look, they are, as a general rule, probably the largest creditor that we see in most companies that are in trouble, and they're certainly one of the largest creditors in Australia in and of their own right. The number is, there's a couple of different numbers that are floating around at the moment, but the one that the ATO generally focus on is what the popular one is collectible debt.
Yep.
And the ATO is saying that their collectible debt book, not the total debt book, but the collectible debt book is $36 billion at the moment.
36 billion. Yeah.
So a very large number.
That's a lot of money. I think a lot of our clients and a lot of the clients for our audience members today would fit in what we would call small business.
Yeah.
Where does small business fit in around that debt total in the economy?
Yeah, so the ATO are very put a lot of importance on the small business market, and in the Australian economy, they're 50% of our employment. Our employment in Australia is done through small business or what's deemed to be small business. But interestingly, they're currently responsible for 2/3 of that collectible debt.
Okay. The ATO really, they've been pretty good, haven't they, Ash?
Oh, to be honest, I have never seen in the last 2.5 years the generosity that I've never seen it before. So they are being very supportive. They have not gone into any recovery action whatsoever up until the last couple of months. And they've really allowed themselves to be used as an extra source of cash for businesses to try and survive. But that, of course, comes at a real risk now because they now want their money back. But up till now, they've been incredibly generous and kind in helping people through.
It's almost back to the days of the second overdraft. Your first overdraft with your bank and your second overdraft with the ATO.
Very much the unofficial overdraft.
The unofficial overdraft. Let's talk a little bit more about the ATO. And I know that recently you're a guest speaker at a webinar with Anita Challen, who's an assistant commissioner with the ATO.
Yeah.
She seemed nice. How was that?
Oh, look, she really lovely lady, which you don't often think of with assistant commissioners of tax, but she was really lovely, and it was really clear the support that they're trying to give the business to help them get back on their feet. There really is a focus on engagement and trying to find a solution rather than just smashing everyone. A really positive approach to it all, I felt.
I think it was good to hear from an assistant commissioner on where how they were thinking and what their priorities were. It's good to get some insights on that.
Yeah. So
let's get into it then. Now, the ATO have been very supportive, as you said, but there are clear signs that they're going to start acting soon. Now, the ATO sent out around 50,000 warning letters, and that's just absolutely unprecedented. People certainly can't say that they weren't warned. So what's the update with the outcome of those letters, or what happened?
Yeah, well, one thing I will say that Anita was very clear that they weren't warning letters, they were awareness letters.
Oh, awareness letters. Okay.
Which really, when you look at their stated goal of being to engage with the business owners and people who have the debt, making them aware of what could happen, that they could be issued with director penalty notices, they could be issued with credit bureau notices. It was, I thought it was, it's quite right to call it an awareness letter to say, here's an option. When they sent those out, Anita was saying that of all of those letters that went out, 1/3 of those letters, or the businesses attached to those letters, actually engaged and either paid their debt or entered into payment plans.
Okay.
So that was, I wish I could send a mail out and get a 33% return rate on it.
Marketer's dream.
So they got off to a good start with that. And that really is a sign of how good they are trying to get into the engagement. A lot of it was payment plans in place, putting payment plans in place, which is handy for people who have time to get on top of it.
All right, let's just stop there and talk about payment plans for a bit. What are some of the important things to know about payment plans, Ashley?
Yeah, look, probably the most important one for me is that people understand that if you have a director penalty notice, if you've received an actual director penalty notice, not an awareness letter, that a payment plan does not remit the liability on a director personally.
Okay.
So if you've received a director penalty notice and you've entered into a payment plan, as long as you complete that payment plan, then your debt's obviously looked after. But if you don't, if you get into trouble, and let's face it, the cash flow and managing money coming in is very difficult for most businesses at the moment, that if you enter into a payment plan, but then you can't meet it, whatever's not paid under the director penalty notice, the director will be liable for that. So it's not a form of remission compared to the other options. So entering into it is something that you need to be really, really careful of, because if you can't meet it, you're going to get caught personally.
Yeah, so if you get a payment plan or not, you get a director penalty notice, 21 days after that it locks down.
Mm.
So if you don't pay the payment plan, the penalty's already locked down on whatever remains outstanding. I think that's just such an important point, Ash.
Yeah.
And I think payment plans are great when you're really confident the company can pay. These days, though, there's so much uncertainty, it can be really hard to be sure. So talking a bit more about payment plans, what other things should people consider when they're thinking about them?
Well, I think one of the other big things that they need to keep in mind is making sure that it's affordable, and that the ATO has been quite open to setting a payment plan for the next 6 months, giving you time to see how the market's recovering, and then they'll enter into a new one, and making sure that that's reasonable and affordable, and you can manage that. The other part is making sure that when you're setting them up, that you're aware that you have to meet all your current obligations on time.
That can trap a lot of people, can't it? That they agree to the payment plan, but then get caught unable to meet their current lodgements.
Yeah, and that's and for businesses that haven't done that for the last 18 months, haven't met it on time, that can be a big chunk every month or every quarter on top of this the payment plan that you've got in place. So, and we're finding that's what's trapping people more than anything else, because they might be a couple of days late on the main quarterly BAS, but then they're out of date on the payment plan.
And if you're out on your current lodgements, you're in default on your payment plan. Straight up. Okay.
Yeah. And I think that short, the short payment plans and then needing to reset them all the time, that's starting to, we're seeing that's starting to cause some issue. And I think you've got a client that's, you're right in the midst of that battle at the moment, aren't you?
Yeah. I have a client's got a bit of a history with the ATO, and they did receive a director's penalty notice before the pandemic, so nearly 3 years ago. And it was a decent size, it was 2.5 million. So the ATO sent them the director's penalty notice, but then they didn't do anything about it during COVID. There was no enforcement or anything like that. The client was contacted by the ATO even before they sent out those awareness letters. And he entered into a payment plan. And the idea was that the payments would be set for 6 months and then it would be reviewed. He made all the payments which were directed towards the superannuation that was outstanding, and that's very common for an ATO to direct the initial payments to superannuation. The client struggled to make the payments, but he managed to sort of scrape by. But there was a bit of borrowing from Peter and begging from Paul, and he now finds that he's pretty much tapped out. He's depleted any resources that he might have had. So a couple of weeks ago, it came time to renegotiate the payment plan. The 6 months were up, and the ATO have advised him that they're going to reject his payment proposal and that they're not going to be able to enter into a new plan with him. They also pointed out at the time that he'd now be liable under a director's penalty notice for about 1.5 million. So now he has nothing behind him, and he's used all his reserves, and he probably has fewer options than he did 6 months ago.
Yeah, and obviously didn't do anything to prepare in case it didn't work out.
No. So do you have an example of someone that had a bit of time but used it a bit better than that?
Yeah, so he, again, very well, didn't quite have the extensive debt to start, the DPN from 3 years ago, but we had a client who got one of the awareness letters, and he rang us up, talked about it. We agreed he's keen to pay it and would like to pay it if he can, but he works in an industry where he's concerned about the strength of the industry and the strength of his cash flow. So he entered into a payment plan just for a short period of time, about 4 or 5, it was about 5 months that he put in place. But he then sort of said, well, we still need to look at what happens if I can't meet that moving forward, or if I can't get a longer term payment plan. So we started putting together a plan for our plan B for him.
So what would a plan B look like for that client, Ashley?
Yeah, so we're preparing him for a restructure of his business. So while the payment plan's going on, we're getting goodwill valuations, plant and equipment valuations. We're having conversations with the asset financiers and other secured creditors to prepare for the sale. getting all the sale documentation organised, establishing the new trading entity, going through the process of negotiating with the landlord to move the lease to the new entity. And the big one that seems to be at the moment is dealing with all the related party loan accounts.
They tend to pop up, don't they?
Oh, mate, it's just and people are just going, oh, well, I'll save my tax and we'll just take it out through a loan account. And it's, when we get to these problems, it's a massive issue. So we're working through all of that. We've got the plan B's just about ready to go now, and his payment plan's due up in 2 months. So if he can continue to make the payments, he will.
Yeah.
If it looks like it's going to turn more like your client and he's not going to be accepted moving forward, then we've got the restructure in place to do it. And what it'll actually allow us to do is, if he can pay it, we'll have an asset holding entity that is protected from the future.
Yeah.
And if we do need to, then we can bring the whole business over. So he's sort of got the best of both worlds at the moment. We've got some asset protection in place. And he can see where things go from there.
Well, I know who got the worst of both worlds, mate. Can we swap clients, maybe?
I know you love a challenge.
So really the keys are that if you have to enter into a payment plan, you really should have a plan B as well. And if you have some time, just make sure you use it wisely. Would you agree, Ash?
Yeah, absolutely. I mean, don't wait for this DPN to arrive. I mean, particularly if you've got the awareness letting or the warning letter, whichever word you want to use. If you've got one of those, you know that you're on a target.
Sure.
So don't wait for it. Get yourself prepared, because 21 days is not a lot of time to do the things that we need to do, to protect the business.
Couldn't agree more. So look, let's talk a little bit about the dreaded director's penalty notice, the DPN. I think the last time we spoke about this, we said we expected the ATO to start issuing DPNs. I don't think they were at the time. Is there any news there?
Yeah, so Anita from the webinar last week told me that they're now issuing 100 DPNs a day.
A day,
approximately, yeah. So that's a fair chunk that are going out that are hitting businesses. So they're certainly starting to check.
Yep.
I mean, as I mentioned, 1/3 of the warning letters were or awareness letters. People did something. They've got payment plans in place, or they did pay off the debt. They were just waiting for that push.
Yep.
So that they don't have to worry about defaults and all the rest of it. But the ATO also now believe, and they were pretty clear about this last week, is that they've given everyone sufficient time to do something about it.
Yeah, yeah.
So they've said, we warned you, we've made you aware. We've called you, we've chatted to you, we've done all these different things. Now's the time for action on behalf of the businesses.
100 DPNs a day, that is a fair chunk, but I reckon they could issue a lot more if they wanted to, eh?
I would think so. Yeah, I think it's probably just about manpower is why they're at 100 a day at the moment. Yeah.
It's getting very real now, though, actually, that directors' penalty notices are going out. I don't think anything quite gets the director's attention like getting a penalty notice in the mail.
No.
It'll wake you up, won't it?
It seems to wake them up even more than credit stat demands, but we'll talk about them later.
Yeah, it does. Anything else to know about the current wave of DPNs that are going out?
Look, so at the moment, there seems to be a majority focus on PAYG and superannuation director penalty notices. We've talked in the past, Phil, about the GST can now be included as a DPNable tax debt. And we've seen a few of those, and some fairly large ones with debts going back sort of 2, 3, 4 years. So some big numbers that we're seeing, but it's but predominantly we're seeing PAYG and superannuation as the main focus. So that's where I think they'll use the GST. It appears a little bit sparingly at the moment. But if you get a DPN for PAYG, you're going to end up having to deal with the GST component anyway.
Absolutely. So look, just as a quick reminder to our audience, the director's penalty notice will go to the director's address that's recorded on ASIC. Now, we believe the ATO may check the address against their other records, but they're under no obligation to do so.
Mm.
If it goes to the address as per ASIC, it's been served, whether the director gets it or not. Now, Ash, let's talk a little bit of real world stuff about what can happen when the DPN goes out.
Yep.
So when a client shows you the DPN, what sort of things do you look for?
The very first thing we always look at is the date of the DPN, because you know, in the last month alone, I've had clients who had left the letters in the wheel well of the passenger seat of their car. They've only opened them up, you know, 5 days before they expire.
Yeah.
So we look at, because it's not based on when the letter arrived, it's actually based on the date of the letter. We have a look at the date to see how long we've got to deal with it, whether it's already expired or whether we've still got time.
Okay.
Once we've worked out whether we've got time or not, the next thing is where we work out and we focus on is how much of it is non-lockdown and how much is lockdown.
Mm-hmm.
So if you've got, you know, for PAYG and GST, you've got 3 months from the date of the lodgement of your BAS, your activity statement, to lodge it for it to still be in the non-lockdown phase.
Yep.
If they've lodged it over 3 months late for those components, then it's automatically locked down. Superannuation is much tighter. If you need to lodge the forms on the day that you should have paid it, otherwise it's a lockdownable event.
Mm.
So we focus on looking at how much is lockdown and non-lockdown, because that will determine some of the course of action that we need to take for a client.
Sounds complicated.
Yeah, no, it's actually not. The ATO actually have been quite generous in that they make it very clear on the forms. So they have a separate one for superannuation, a separate one for PAYG, and then a separate one again for GST.
Right.
And they actually break it up into the columns of lockdown and non-lockdown components.
Mm.
So it's relatively easy to identify.
Okay.
So now, Phil, you like to play dumb,
Mm.
but we know that that's not the case. So why don't you give me some of the tricks of the trade that you know and any tips that you've got on DPNs?
Well, one thing we always recommend is that the client has their accountant check the lodgement history for the period shown on the DPN. Quite a number of years ago, we had a client who had to push to get his PAYG reported within 3 months of the due date. And he managed to get it all organised and his accountant lodged it sort of on the last day, sort of at the last minute.
Mm.
When the DPN came out, though, it had the final quarter in it. And a DPN that should have only had a $42,000 lockdown component had nearly $200,000. Now, my poor old client freaked out.
Mm.
But when the accountant checked into it, we were able to show that it had been lodged on time, but the ATO had not processed it for 2 days. So in the ATO's records, it was showing up as being 2 days past the 3 months. Now, when they were advised of the situation and they checked it, the ATO withdrew the DPN and issued one that only had a $42,000 lockdown component. Now, those DPNs are generally right, but you do get little quirks like that. And we always recommend we check them and just make 100% sure that we've got a good understanding of what's locked down and what's not locked down.
Yeah, well, and it's really important to remember to check those sorts of things because, you know, everyone can make a mistake.
It's it. So, Ash, as we've been talking about, a key thing we need to identify and a key consideration is the split between lockdown and non-lockdown components of the DPN.
Yep.
Could you just expand on that a little bit for us?
Yeah, so I guess with 21 days, it's not a lot of time. So having a plan B in place early is always really critical. But the lockdown component can't be addressed. So it's once it's locked down, it's already on the director's personal liability.
Yep.
And it will actually show up in the MyGov once the 21 days expires. For the rest of it, though, so the non-lockdown component, there is actually an ability to get out of that and it not become a personal liability.
Right.
Now, first and obvious one is pay it.
Hey.
Payment plans are a definite no-go. They don't actually work for that. Then outside that, the only options you've got are insolvency options. So voluntary administration, liquidation, and the small business restructure are really the only options that you've got to, and it's deemed as remitting the debt, is if you enter into those three things within the 21 days, then you're not personally liable for that debt, and it gets locked away through that. So quite often the decision of what you need to do will depend on how much of it is lockdown and non-lockdown.
Okay. So sometimes you might recommend that the director lets the penalty lock down. Could you give us an example recently where you did that with a client?
Yeah, we actually had a client who came to us about probably 2.5 weeks ago. Another one of these great ones where I hadn't bothered to open my mail, and here I just opened up and I got one of these director penalty notice things. We had 7 days left on it. So once we checked the dates, we had 7 days to go. When we actually broke down what was lockdown and non-lockdown, he actually only had about $8,000 that was non-lockdownable.
So he's been a bad boy with his reporting.
He was terrible with his reporting, obviously. Yeah, so he only had 8,000 that wasn't already locked down. The other 140,000 on the director penalty notice was already locked down.
Right.
So he had reasonably good business. It was trading well. It had some contracts, some assets, but obviously he had been quite severely impacted by COVID over the last couple of years, particularly with the lockdowns, because he was in an industry where he needed to be in other people's houses.
Yep.
So when we had a look at it, we went, well, to try and restructure a business or to do something with the business in 7 days, when all we were going to do was save $8,000, we made the decision to just let that become lockdown, and then focus on putting together a proper restructure plan, as well as then focusing on coming up with the personal plan to deal with what would become, rather than just 140, it was 148. Yep. So not a lot of difference. So, so we were able to make that call based on the fact that there really wasn't any value in moving super fast.
No, but still need to do something because, as you said earlier, he's got not only that, but all the GST debt and everything as well.
When you add it all up, there was 148 of PAYG, but there was another 300 of GST.
Yeah,
right. Things can go the other way though, can't they, Phil? Like you, have you seen the opposite to what I've just talked about?
Yeah, well, recently I've been working with one of our strategists in trying to help a client. It's one of your team down in Melbourne, actually. Now, in this case, it was, to say it's the opposite, the lockdown component was $2,700. The non-lockdown component was over $1 million that had been remitted. Now, the client did not contact us until 3 days prior to the expiry of the DPN.
$1 million to get out of in 3 days, eh?
Yeah.
Nice.
Easy done.
Please tell me how.
Well, people might think that you get that close that there's nothing you can do and it's game over. So in this case, what we helped the client do was for the company to enter into a management agreement with a new trading entity. All the staff were transferred to the new entity and all employee entitlements were taken over. A director's loan account was reconciled and some wage journal entries were made, and a liquidator was then appointed to the company. Now, after the appointment of the liquidator, the new trading entity made a commercial offer to buy the business. There were some arrangements made to pacify some secured creditors, and then the liquidator was able to accept the purchase offer.
So that way we were able to continue with the business and keep the income flowing through, even with only 3 days to go.
Yeah, and buying the business from the liquidator like that did come with a cost, but it was worth it. In addition to having an income and being able to continue to pursue the interest in the business, a penalty of over $1 million was avoided. Now, the outcomes could have been even better if the client had taken action sooner, like, I don't know, maybe when they got that awareness letter, the client got a good outcome, but it could have been an even better outcome if they'd given themselves a bit more time. All right,
Phil,
Ash.
before we should just say that, and like most of the people listening to us are advisors, and most of them would not necessarily have received these warning or awareness letters.
No, not at all.
Awareness letters were sent to the directors, not to the accountants. So we talk about this and say how important it would have been to bring those things to us, but obviously the advisor's not aware of it, but it should be something that they can ask the question, did you receive one of these? Have you seen one of those, or whatever the case may be, because that will then highlight the fact that they're already on a radar.
Absolutely.
So we know that not all of these are being delivered to the accountants for them to jump on, but certainly in having chats to your clients, asking about whether they got these warning/awareness letters, will certainly highlight that maybe a plan B is needed sooner rather than later.
Yeah, often it's a shock to the accountant or bookkeeper that they did get a letter, isn't it?
Yeah, it is, yeah.
All right, so let's say the ATO send out a director's penalty notice and I'm a bad boy, so I ignore it or I leave it in the wheel well of my car or whatever. What's the ATO going to do next?
Yeah, so at the moment, they're not doing a lot, Phil. They have the ability to, once it becomes lockdown, they can obviously pursue down the personal path rather than the corporate path. So they can look at bankruptcy and look at pursuing them through the personal courts rather than through the corporate courts. Not that that's the right terms, but you know what I mean.
Yeah.
So they can do it, although we just haven't seen a lot of it. It may be a little bit early, like they're only probably a month into this really aggressive approach. But the next step for them is, the next step is to obviously pursue it through the bankruptcy courts. But they can also, it will go on the MyGov, which means that if they've got other income or money due back through tax returns and what have you, once it's locked down, they can actually start taking that as well.
So why are they not sent? In the old days, Ash, pre-pandemic, there'd have been bankruptcy notices getting slammed out by now. So why are they not doing it now?
Oh, look, I think it comes back to what I've talked about in the past, is that I don't believe the ATO want to be in the court list too much yet. I think they're trying to force the hand of the directors and individuals to make steps to do things about it themselves. If they, at the moment, you look at building companies, and every time a building company sneezes, it's on the front page of the news as the next one that's going to go. And sometimes I think some of these things can be self-perpetuating, philosophies. So I think the idea is that the ATO is trying to get the director to take some responsibility. They put the debt on them personally. So that they may take the steps and they do the things that they need to, and they're not the ones who are putting themselves in the court. When they do get to put themselves in the court, they'll have done everything they can first.
So they want to wear the white hat for a while, actually. They don't want to be in the court listings. They don't want to be the bad guy.
That's what I expect.
Yeah,
I don't know if they're actually saying that, but that's my read and my take on it.
Yeah. Oh, fair enough. Do you expect that to change at some point?
I think it has to, Phil. I think, at the end of the day, the government needs the money to come back in so that they can deal with all the other things that they want to do. And, and the ATO isn't meant to be a bank. So they need to either collect their money or deal with the debt completely through the insolvency in this system. So they will, without a doubt, continue to ramp up. And we'll start to see more bankruptcy notices and more attacks coming.
I take it it's the same with the ATO and recovery action against companies?
It's interesting. We're not seeing a lot of that yet. And again, for the same reason, I believe. So there's very few creditor state demands that I've seen at this stage. So I think, again, same thing. They want to stay out of the courts. So they're using the director penalty notice, the credit bureau and those type of things as a way of getting the directors to make some decisions and do something about it.
As you say, it's probably going to have to change at some point. There are lots of zombie companies out there that are going to be put down sooner or later.
And some people just don't have the money to do it themselves, so ATO will have to spend the money to do it.
We'll have to do it at some point. Now, the other warning, the other awareness letter was about the ATO reporting defaults to credit reporting agencies. Do you have an update on the situation with this?
Yeah, so, well, again, last week, the Assistant Commissioner talked about the fact that obviously the first round of awareness letters went out. If the taxpayer still hasn't engaged, there will now be a further notice of intent to issue a default, which will be sent to the taxpayer. And they'll have that notice of intent gives the taxpayer another 28 days to get on the phone and make some type of arrangement with the debt. And the ATO have said that they will try and make contact as well as just sending that letter. And then if all of those fall on deaf ears, or they're just completely missed by the head in the sand type approach that some take, they will then report to the Credit Bureau after that point for the default.
Yeah, we've spoken before about how devastating it can be to a trading business to have an adverse credit report.
Yeah.
Trade creditors and lenders don't like defaults, and they do check up on them.
Yes.
What happens once a default's been reported by the ATO? Like, what's their process?
So they have a weekly upload to the credit reporting agencies, and they will, for when they're added to the list, once a week, they'll get reported to the credit bureaus, and then that'll be uploaded into their systems. One of the things about the ATO's credit bureau reporting, though, is that once you have paid the debt or entered into a satisfactory payment arrangement, they'll actually remove the default. So you can't do that in any other with any other debt. Once it's reported,
It's
you
there.
can show it as satisfied,
Yep.
but it won't be removed, whereas the ATO one will be removed. I think, unfortunately, though, the damage would have already been done. Because if someone sees that the ATO's been reported or has reported, and then it goes away, they're going to go, well, you know, have you still got a debt? Is there a payment plan?
Yep.
Is it going to become a problem again?
Mm.
So I think by the time it's reported, I think you're in very dangerous territory.
Mm.
But in theory, you can pay it and it will be removed.
It'll be removed.
Give it a cleaner mark again.
Again, a bit of fair play by the ATO there, really, to update it weekly. Try getting a major lender to update the credit bureaus weekly. You know,
Absolutely. Yeah.
So fair play to them.
Yeah.
Just as a reminder for everyone, Ash, what sort of ATO debt is eligible for reporting to a credit bureau?
Yeah, so debt has to be over $100,000. It must be over 90 days old, and it must also be attached to an ABN, so it's not personal. And there can't be any current disputes or arguments or uncertainty or hardship applications or anything on foot. They can't report it while those things are still going on.
So, you know, the big one is 100 grand, 90 days. If it's under that, you're not going to get reported. So,
that's correct. Yeah.
Now, actually, I've seen a number of newsletters and other information from insolvency practitioners. So I think you get them too, and I'm sure that many people in our audience today also read them.
Yep.
I've seen a number of references in there to garnishee notices and the ATO using garnishee notices.
Yes.
Can you briefly explain what are they?
Yeah, so there is statutory right that the ATO's got through their act, which enables them to write a letter effectively to banks or anyone who has money of the companies, so debtors, banks, what have you, and they can ask for that money to be remitted to the ATO rather than it being remitted to the company that it's owed to.
Yep.
Most of the time, we'll find that the garnishees are for a percentage of the debt. So, you know, it's either X amount or 30% if you don't have the whole amount. Sometimes it'll be on debtors where it's for the whole amount of the debtor, and all that money must come to the ATO. But we've seen it on all sorts of things really over the time. But it's a pretty powerful tool when you're trying to get some money that you otherwise wouldn't get your hands on easily.
So there's this talk about garnishee notices being issued. Have you seen any? What's your experience?
Yeah, look, there hasn't been a lot. There've probably been 2 or 3 that we've seen with clients, so not a lot. It's a sparing tool, and I think even last week with Anita from the tax office. They see it as a sparing tool that they can use from time to time when nothing else is working to help get collections.
Okay. Well, thanks, Ashley. That's pretty much everything I had. Maybe if you could just give us a bit of a quick summary and a wrap up for today, and we'll wrap up our session.
Yeah, so just before I go into, I'll just let everyone know that if you do have any questions, you can start typing them in now while I just do the rundown, or put your hand up and then Elise will tell me whether you put up the electronic hand. Don't do this one, because most of you have got your cameras off, so that wouldn't help us at all. But I think just a couple of the key points we really wanted to get across today. Payment plans are not a way of remitting a DPN debt. So please be aware that you can enter into a payment plan, but if you don't satisfy the payment plan in full, then the director can be held personally liable for what's not paid. I think the critical thing, which, again, we've probably almost ad nauseum, Phil, have talked about, is having a plan B. Even if you're entering into payment plans, look at what options can be done to protect yourself in case the cash flow isn't quite what you think it's going to be. I think it's very clear that the ATO have said enough's enough. We've done everything we can.
Yep.
We've tried to be nice. We've tried to be friendly. Now it's time to pay the piper. Even though 1/3 have actually said looked after the warning letters, there still leaves 2/3 that haven't. So there's a lot of people out there, and to be honest, I think that's only a drop in the ocean of those warning letters, because certainly what I've seen in the last month, a lot of the stuff that's coming out, they didn't even get warning letters.
I understand why some of them are a bit scared to open the mail, Ash.
Oh yeah. It's look, let's face it, business owners are the most optimistic people in the world, and they don't like taking any bad news at all. We anticipate that the 100 DPNs a day will increase, so that we'll get more aggressive over time.
Yep.
And that although we're not seeing a lot of GST DPNs, they are starting to flow. So that will put even more immense pressure on a director, particularly if they don't meet it. If they come with only a couple of days in time, it can be a real significant issue.
I don't see any questions in chat. So.
No, we've either done a really good job or a really bad job, and everyone's having a nap.
Just getting the CPD points, mate.
Yeah, that's it. Yeah. No, I'm sure everyone's taking some good notes there, Phil.
Yeah.
So that's probably us for today, Phil. I thank you for coming to us from Health and Safety Protocol Central.
Thank you.
And really impressed that you put a tie on at home.